The euro gained versus the safe haven Japanese yen on Tuesday, rising to near 172 EUR, ahead of German data and the Eurozone Economic Bulletin for January. The pair last traded at these levels in mid-December 2022. Will the bulls be able to push the price beyond 172 EUR? In this video, we'll take a look at the latest economic data and the upcoming releases that will drive the market in the next couple of hours. Let's start with the German preliminary data for December. The figures showed that the largest economy in Europe grew by 0.2% in December, which was better than the expected stagnation. The fourth quarter GDP grew by 1.1%, which is also better than the expected 1.0% growth. Despite the better-than-expected data, the market reaction was muted as the GDP figures were revised down from the flash estimate. The 2022 GDP grew by 1.8%, which is below the expected 2% and the previous value of 2.1%. The final figure will be published on February, so the upcoming releases may paint a clearer picture of the German and Eurozone economies. In the meantime, investors are digesting the latest monetary policy decisions. The Bank of Japan maintained its ultra-loose policy as the central bank kept its key interest rates unchanged. On the other hand, the European Central Bank delivered another 50 basis point rate hike and signaled more tightening to come. The ECB's main refinancing rate is now at 2%, the highest level since December 2007. In his press conference, ECB President Christine Lagarde said that the next rate decision will depend on upcoming data releases, which will provide more clarity on the outlook for inflation. According to economists, the ECB is likely to raise rates by another 50 basis points in March, bringing the refinancing rate to 2.5%. After that, the pace of tightening may slow down as the euro area heads towards a recession. Later today, the Eurozone Economic Bulletin for January will be released. The data is considered a forward-looking indicator of economic activity, based on a survey of professional forecasters. The index is derived from a diffusion index, which means that a value above 50 indicates an expansion, while a value below 50 indicates a contraction. In December, the index registered 49.2, which was slightly below the 50 line. Will the index move back above the 50 line in January? If it does, this will be seen as a positive development for the euro. However, if the index falls further below the 50 line, then the bearish sentiment around the euro may intensify. In conclusion, the immediate outlook for the euro remains uncertain as investors digest the latest economic data and central bank decisions. The upcoming German and Eurozone data releases will provide more clarity on the outlook for the single currency. For now, support may be found at 171.50, which is the 200-hour moving average, while resistance is seen at 172.2, the level that the pair failed to breach in December. A break above 172 could see the bulls gaining back control over the bears. But until then, the market may remain volatile. What do you think about the latest economic data and the upcoming releases? Let us know in the comments below, and if you like this video, give it a thumbs up. Thanks for watching.